What's up, everyone? All right, so in today's episode, I'm going to give you my watch list for Monday morning and my game plan for the week ahead. I'm excited because this is going to be our first full week of trading without a market holiday in 3 weeks. We had Christmas holiday, then we had New Year's holiday, and then last week we had a memorial for Jimmy Carter on Thursday, and Friday was super slow, as you probably recall. So I'm excited that this week, finally, we get 5 consecutive days in a row. What we know is that typically Wednesdays are my biggest green day of the week. The reason? I start small on Monday. I want to build a cushion, and once I've got a profit cushion, then I can take risk on Tuesday, Wednesday, and Thursday, and then slow down on Friday. That's kind of the typical way I flow through the week. So now we've got a goal. Monday morning, first trade, I want to get green so I can start building that cushion. So that first trade that I take on Monday needs to be high quality and a setup that I've got 90% conviction in. Because the worst thing that can happen for me is that on that first trade, I take a big loss, I dig myself deep into the red, and now I'm on the defense. I've got to conservatively get myself out of the red, get myself just back to flat, and then very easily Monday is a wash. And then Tuesday, where I'm supposed to have a cushion, instead, I'm kind of starting over. And then that kind of screws up my whole week. So let's get it off to a really strong start here Monday morning. Now, for those of you guys tuning into this recap or this game plan watch list for the week ahead, if you want to do a 2-week trial, you can watch over my shoulder as I'm trading for the next 2 weeks. It's $20. Now that $20 is going to give you real-time market data to the scanners, the charts, and the news feed and the chat room, everything that we have right here inside the Day Trade Dash platform. So you guys should check out the 2-week trial if you haven't already. I'll put a link in the top of the comments and pin it to the description as well. And let's go ahead and start breaking down the game plan for Monday morning. Okay, so right now, I'm going to start by looking at our after hours top gainers scanner, which is right here. So you can access the scanner over here under the little toolbox, go down to scanners, and then after hours top gainer scanner. So I like to start here because this shows me the stock that closed the strongest in after hours on Friday. Now, sometimes when we have stock that starts squeezing after hours, that gives us continuation into the next day. It's not always the case that we have good continuation from Friday to Monday, but on the other hand, this is going to be kind of the most obvious stock that most people are going to be looking at on Monday morning, especially at 4 a.m. So I got to sync my chart up here. I'm going to save it there. And let's pull this up. TRAW. Okay, so what do we know about this company? Well, looking at the stock quote window, we can see that it's a pharma, right? Just in the name. So now I could pull up the company. We can also see that's located in the United States and it's a NASDAQ listed stock. So being located in the United States, that's fine. If it was located in China or it said Hong Kong, or Singapore might be a little bit more, on the one hand, skeptical that it may be a stock that could do a big dump, but it could also have a pump. And you can ride that first wave of momentum. You've just got to be really quick about getting out when it starts to turn around, because we know that a lot of those overseas stocks can do some shady stuff. So there's volatility there, and you can make money trading them, but you've just got to be a little bit extra careful. It's not to say that U.S. stocks don't carry risk as well, especially in the biotech pharma sector, but the international ones especially so. All right, so TRAW, let's see. So we pulled up the stock quote right here, and I just want to see. Okay, so they're in Pennsylvania. It's a biopharmaceutical company focused on discovering and developing novel products to treat cancer. Okay, so that's, but wait a second. Currently in phase 1 in what? China? Okay, so this does have a China connection. Interesting. Why are they doing their phase 1 in China? Okay, so stock rallies 24% on avian flu drug update. Okay, all right. So let's see more. Very interesting. Now, sometimes what I'll do on these stocks is I'll actually pull up the filings. I'll just take a look at it really quickly and just see if there's anything else that I need to be aware of. So let's see, I'm going to check the shares. All right, there we go. So total cash, they had $5 million of cash. This was as of when? September of 2024. They had some other receivables, but I really just look at the cash. So $5 million in cash. So how much are they? how much money are they spending? Okay, so they spent $8.4 million in the 3-month quarter that ended September 30th for them. So, wow. All right. So they're spending a lot of money. So is this the type of stock that is going to need to raise money in order to continue to fund future development, future research and development? And it's very possible that they will. So we could check to see if they have a filing, a shelf registration, and they do. So this shelf registration gives them the right to sell more shares on the open market. In fact, 128 million shares. That was dated July 1st. Okay, so that all gives us a little bit of context. It's a biopharmaceutical company. They do have a catalyst. They do have a headline, which is good, but it's also a company that's not currently operating at a profit and may need to raise money. So when they have the stock spike up 25, 35, 40%, or 50%, or 100% or more, that could be an opportunity for them to sell some shares onto the market into that volatility and raise a little bit of money. Selling 2 million shares here would raise $24 million, $12 a share, right? So that just 2 million shares could keep them going for another, well, they're doing 8 million. So they need, it looks like maybe up to $32 million a year. It's a crazy amount of money, but 32 million a year to continue operating. And they've got 5 million as of the end of the quarter. So they're not going to make it even through, they actually, in theory, based on that, wouldn't even been able to make it through all of December, but maybe there's something in the headline that they already got some money from somewhere. So, all right, looking at the chart, let's start high level with the daily chart. So daily chart on this one, this is always really helpful because I kind of get context. So first of all, what's the all-time high? I'm kind of trying to go back and sort of see how far back we have to go. So if I click on this trend line here, and then I put it over the candle and I press the control button, you see how the line jumps when I press control? It snaps to the top of the candle. So I press control and then I click that line. Now, in order to get your drawing tool sticky like this, on the drawing tool toolbar, you can go into any tool and you can make a star there and it's on your favorites. And once you put it on your favorites, you get a little sticky panel there with the tools that you like to use. So all-time high, $61.25, but they do have a reverse split back here. So this was a 25-to-1 split, which means the actual all-time high was 1/25 of that, but everything gets sort of adjusted when they do the split. So now we are above the 200 moving average, which was down here at about 10, but we're not above it by a lot. It did pop up back here to a high of 1944, and that was on December 23rd. Did I trade this on December 23rd? Now, I can't seem to remember. Well, what day was this? That was the 30th. Okay, so that's a different day. I'm not totally sure, but the chart does show that it had a decent amount of volume on that day. So I might have. I'd have to look in my metrics. Let's take a look. So, all right, let's see. So TR, we'll do simple. TRAW. No, looks like I didn't trade it. So you know what? Yeah. Or well, it doesn't matter. So for whatever reason, oh wait, no. I'm sorry. I did trade it on the 23rd. It just took a while to load, and I made $1,200. Okay. All right. Well, I guess it wasn't particularly easy to trade. Wasn't a big winner. It was not very memorable. All right. So currently the float's 763,000 shares. It's a very low float stock. It had this candle, but it was barely green. So it squeezed up to 20, then pulled back. And then it came back up a couple days later. Let's mark the high of that candle right here. So this one came to 15, the high there. I'm going to move this up here. Actually, I'm going to get rid of that one. I'll just remove it, and I'll put a new trend line at the top of this candle. So those are our levels, $15 and $19.44 right there, and $61.25, I guess. But so these are our current levels right here. All right, so we peaked at about 12, and we have room up to 15. And then if we break 15, we've got room up to 1944. All right, so now we've got a little context. We've kind of broken down the chart. Is this news strong enough to give it that kind of move? Well, you know, it's a tough call. Obviously, the market liked it well enough to rally the stock up 52% going into the close on Friday. You know, I mean, if it liked it more, it could have gone up 100%, but this is where it sat. So I would say that if nothing else pops up on Monday morning, that this does have a good chance because it's going to be a gap, right? Because this is the thing. This closed officially at $8. So pre-market 4 a.m., it's going to be already gapping up 50%. So it might give us a spike, maybe up to 15 pre-market, maybe higher. But if it's on really light volume, then by the time 6:30, 7 a.m. comes along, it may be that it's already come back down. So it may not be able to hold these levels. And it'll depend also if there's another stock Monday morning that comes out with news, could be from overnight or over the weekend, that gaps up right away at 4 a.m., and then traders are focusing on that one instead. But at 3:55 a.m., what are traders looking at? Well, the only scan you'd really have to look at would be your after hours top gainer scan. That's the only scan you would have to look at to figure what's probably going to open higher, because you don't have quotes until exactly 4 a.m. when trading begins. So then TRAW is sort of the most logical one to look at initially, especially with that lower float. Now, Sage, this one's up 46%, but notice the float is 57 million shares. That's substantially higher. It's also a therapeutics company. It's a US-based company, but actually confirms Biogen's bid to acquire remaining stake. Okay, so if that in fact is the headline, I don't really usually like seeking alpha for getting my news, but so currently owns a 10% stake, as offering price implies a 30% premium, 720. Oh, okay, so I'm surprised it's even trading above that. So that might not end up giving you any more real volatility if it's truly a buyout offer to buy the rest of the company. All right, so then TIRX up 15%. That's not enough, and it pulled back too much, so that's not going to work. Rumble up 10%. Not bad, but that's got a little bit of a tough daily chart because it's had previous moves, and it's kind of on the backside. RVSN, this one, no. All right, so now we've looked at our first scan, which is the after hours top gainer scanner. So now let's look at the next scan, which is our continuation scan right here. So this is showing us some of the stocks that have been making the biggest moves in the recent weeks, and we can look at these to see if there's any opportunity for a continuation trade. So on VRME, on the daily chart, you can see that the stock popped up, pulled back, popped up again, pulled back, and it's kind of in this range. I find this price action to be too difficult. The float's only 8 million shares. It shouldn't be an issue with the float, but I don't know, it's just obviously, look at these candle wicks. This is not easy to trade. So that one I don't have interest in. I skipped over this one right here, too cheap. I'm skipping over this one, it's too cheap. NRXP, 7.9 million share float. This one, and just starting by looking at daily charts. If I don't like the daily, then I won't even go further. So this one does have room back up towards this level right here, right? So we could grab our trend line, draw that. Looks like it's right at the whole dollar of 6. So very common that we see resistance at $0.50 whole dollars, then looking to the left and up, 720, and then the peak right up here is about 733. So I'll just draw the line there. Above that level, you've got a window here up to, it's a nice window here, up to 954, and then above there is another window up to 12. So you do have some windows on the chart on this one, but is it going to be able to pull away? So looking at the last couple of trading sessions, switch to auto here. One of the things I don't love about this setup is I like trading stocks that are beaten up and are right off the lows. It's been selling off for a long time, has news, and boom, you get that nice spike, a little short covering, a little more short covering. But now getting in up here, whereas it just came from down here, feels like disproportionate risk versus minimal upside reward. So I don't love it. Now, of course, using leverage, I could keep tight stops and say I'm only going to risk 10 cents on the trade, and if I can get 40 or 50 cents, it's still a good risk reward ratio. But I just don't know that the daily chart has enough juice in it. So I think I'm going to skip over that one. ARBE, this one had the news with NVIDIA recently. 27 million share flow. It's a little higher. It popped up on the news, then pulled back. Higher volume selling, red volume on these candles. I don't think I'm going to go for that one. All right, and next one down, SPCB. A little bit more expensive at $9, but this one has a pretty similar daily chart in a way to, what was it we were just looking at? NRXP, right? Recently popped up and is holding. So now SPCB has a sub 1 million share float. So that's a lower float. And you can see in one day it went from 5 to 11. So it's certainly capable of making bigger moves. It also has some topping tails here. So it's not totally clean. 1080 is the high. Notice that's a double top with this level here. Then you look to the left and up, and you have this level right here. So that's 1260. Then we look to the left and up, and we're going to have this level up here. So we have a big window right there from 1260 until 2260. So a 10-point window with no resistance, right? This candle, I mean, it blew through all these levels. So now you've got this big window with no resistance. So that's a notable spot to keep an eye on. But what would send it from $10 now all the way up to $22.60? I mean, you would either need a pretty intense short squeeze, or you would need some fresh news. So I'll pull up Ortex here. This is $1,000 a month or something like, or a year. Let's see, SPCB. So I'm just gonna check to see what the short interest is on this stock. 2%. So 2% short interest is not significant enough that I would really put a lot of weight into it. Now, that short interest, they use a special combination of feeds to get the latest short interest. We have short interest here as well, but the short interest from the data vendor that most people get is a little bit more delayed. So it also shows very low, but sometimes I like to just check that feed because when you have a big spike, short interest can change quickly. And so it's nice to be able to check the live short interest. So anyways, yeah, so all right. So I just don't see this one, to be honest, having the catalyst to pull away. BRNG, $3 a share. This is another example of a daily chart where it just keeps kind of squeezing higher, which is great to see, but it's also hard to manage risk up here. Needs to pull back first. So no trades on that one, I don't think here. And now we've looked kind of at the leading setups for continuation. So I would say another thing that we should look at is the S&P 500. We know that the December jobs numbers were good, and that caused the market to drop because it reduced the likelihood of the Federal Reserve doing another rate cut anytime really soon. And this is the kind of funny relationship we're in right now, where seemingly good economic data in the economy is not well received by the market because it means interest rates are going to stay high. The market participants want interest rates to drop. When interest rates drop, people will move out of bonds and they'll move into equities because look, if you're guaranteed to get 4%, 5% on a bond, there's a lot of people who are going to say, why take the risk of going in equities? Yeah, maybe equities, over the course of the year could produce 7%, 8%, but I could get 4% guaranteed, 5% guaranteed. I'm not going to take the risk. So as interest rates come down, you just at a certain point kind of have to take the risk. Otherwise, you're just being silly. And so equities traders want to see the interest rates come down, so it drives more investment into the equities market. And then secondly, it's also better for these stocks that often do borrow money in order to grow their companies. So they're paying more money to borrow because of higher interest rates. So interest rates coming down will increase profitability for these companies, right? So, but the problem is you drop interest rates, and what else is going to happen? People are going to feel more comfortable taking out a mortgage for a house, for buying a car, and then that can fuel inflation, right? So there's this delicate balance that's going on right now in the economy that began during the pandemic, and in truth began long before that, really with the housing crisis in 2008, when home builders started to kind of take, got scared and didn't build enough. So we've had a shortage of housing for a long time. And it's not something where you can just suddenly magically make more houses appear. The whole supply chain has adjusted to a slower building market, right? So now ramping everything back up, it takes a lot. So in the short term, the jobs numbers being good is good for the economy. People are working, unemployment rate is low, but it means that we probably won't see a decrease in interest rates anytime soon, because if they drop the interest rates too soon, it's going to spike up inflation. So overall market's pulling back a little bit, but also big picture, the market's in a bull market. I mean, we're in a really strong bull market, and so a little bit of pullback is really not that concerning. I don't have my data going like way back, but you can load charts that go back like 30, 40 years. You just keep loading it and it goes back further and further. But nonetheless, just recent history, we can see what we've got here. So, so I think at this point, I'm not really concerned about the market pulling back a little bit. Even if we came back all the way down to the 200 moving average, that doesn't concern me. Still, big picture, we're in a nice uptrend, and there isn't any economic data that is devastating. It's good data. It's just not the data that market participants really want to see in order for the market to squeeze up. But that's okay. That's fine. We can still do really well trading individual catalysts on stocks that are moving. CURR was the biggest trade of the week. So if we look at my P&L from the week, I finished, let's see, where is this? Oh, we got to get rid of that symbol. I was doing the symbol filter. All right, so right now, January, $85,000, not bad. $34,000 on Wednesday, best day of the week, up $68,000 on the week. So it was a good week, but I did give back $25,000 off the top on this day here, which was disappointing. So biggest winner was on CURR this week. So if you look at CURR, what's kind of the anatomy of the stock. This is a US company that all of a sudden had news and just squeezed. It ripped really quickly. So this is a company, let's see, they're based out of New York, right? So global fintech platform, e-wallets, financial institution, we had this headline, what was it? Yeah, it was Wednesday, which honestly, some of these headlines, they don't feel super significant, but in AI call center, all right, but man, the stock squeezed. And so on that one, I jumped in quickly. And that's kind of the name of the game right now for me, is when something starts pulling away, to be ready to jump in quickly on micro pullbacks, like right here. So a little dip there, but you would have had to be really quick to get that one. But pops up, hit scanners, and then watch the first pullback, ride that next wave up, and then watching dips to buy dips, sell into the pop, buy dips, selling into the pop, and then just keep trading it until it runs out of steam. And some of these, especially when we look back on the month of December, we had a bunch of stocks that went up $10, $15 a share, from $5 to $17 or 20 or 25 or even higher. So, you never know how high one is going to go. And so as soon as it comes out, it's got news and it's moving, I just start trading it. I break the ice, I build a cushion. Once I've got a cushion, I start to size up, take a little bit more risk. And then once I get back a little off the top, I say, all right, that's enough for me. Now, all the stocks I'm trading, generally, I'm thinking about my 5 criteria of stock selection. How closely does this stock meet these criteria? A perfect stock, A quality, will meet all of 5 perfectly. But there will be some stocks, especially in a hot market, that don't meet all 5 perfectly, or maybe even lack one of them. But because the overall sentiment is strong, the market is strong, I'm willing to take the risk. I'll usually take the risk and break the ice with a smaller position. But if I can get green, then, all right, now I'm in the green. Let's see what this wants to do. So again, the best way for you guys to continue to learn about this is to do a 2-week trial over at Warrior Trading. You can watch over my shoulder as I'm trading. While I'm trading, you will see my P&L in the top corner right here. So you will know if I'm in a stock, if I'm out of stock, what my average price is, and you'll really get a sense of the way I navigate in and out of the markets. It's fast. The markets do move quickly. So I always encourage you guys while you're learning to practice in a simulator before putting real money on the line. So I don't want you to forget, trading is risky. My results aren't typical. All right, now, oops, put on the wrong feed there. So there we go. I'll stop that and I'll go to this one right here. And I'll thank you guys for tuning in today. I'll be back at it bright and early Monday morning, live streaming. So I'll see you guys at 7 a.m. And as always, I hope you guys hit the thumbs up and subscribe to the channel. Thanks again for tuning in, and I'll see you on Monday.